Thank you very much, Shane. Now, I would like to introduce our moderator for our panel, who will then introduce our panel. I would like to welcome onto, if we can call this a stage, Ms. Jerica Gowden, Head of Trade and Working Capital Operations at ABSA CIB. Ms. Jessica Gowden leads the Pan-Pacific Digital Transformation Strategy in trade finance. She has a track record of operational excellence, automation, and risk mitigation. She's completed her executive MBA at Henley Business School, graduating in September 2025, this year. Congratulations. Welcome on the stage, Jessica.
Thank you, everyone. Good morning, everyone, and also good afternoon to those dialing in from Singapore online. Today, as Shane mentioned, it's fascinating about AI and the topic that we're going to discuss. So I think to some people, it may mean different things. If I look at it, probably could mean transformative, it could be disruptive, it could also be uncharted opportunities, which could be promising but yet unknown. So today, our theme is about exploring how digital assets can unlock new forms of trade finance and investment. And our topic, as mentioned by Adrian, we are focusing on financing the future of digital assets as new trade investments. As new trade instruments. So today we will explore how technologies like tokenization, stable coins, blockchain are moving from buzzwords to practical tools. And it's changing the way that goods are financed, moved, and paid for across borders. And in short, we're actually just unpacking how the future of trade is being written, basically in code. So today we're joined by two leading voices in the future of trade finance and digital assets. So online, live from London this morning, we have Dr. Tom Jones, co-founder of Trade Flow Capital, has been at the forefront of applying innovative financing structures and digital asset strategies to unlock global trade flows, especially in emerging markets. Good morning, Tom.
Very good morning, everybody. Thank you for having me here.
Thank you. And from Johannesburg, our own Rob Down, Head of Digital Assets and Channels at ABSA CIB. He is driving the integration and tokenization, blockchain, and next generation payment solutions into the bank's client offering across Africa.
Morning.
Good morning.
Morning all.
Morning. Like a rapper, huh?
Morning. Thanks for having me. I actually feel a bit underqualified for this panel. I didn't realise an MBA and a doctor. I'm the least qualified, but nice to be here.
Thank you. So just to set the scene, and to Tom, just to put you on the spot a bit. So, so to put you on the spot, so let's imagine that you and I, we're on a flight from Singapore to South Africa. And somewhere over the Indian Ocean, you find out that I am an energy commodity trader. I share that I know nothing about blockchain or digital assets, tokenization, stable coins, but I'm actually quite curious how this could help my business. In under 90 seconds, so that's a bit under pressure, right? How would you explain these concepts and, more importantly, why they matter to someone like me?
Okay. Well, yeah, probably would get chatting over the Indian Ocean. The Wi-Fi always goes down on the plane over India there. So, nothing much to do apart from talk to the person next to you there. So yeah, no, in terms of a digital asset, it's simply getting everything off paper. You know, it's something of value. It could be money. We see a lot of talk about stablecoin these days, and we're going to be talking about that later. A share in a company, and topically, you know, cross-border import-export trade of goods. Tokenization, that's the process of taking an asset, that asset, and creating a secure digital representation of it on a blockchain, which you can just think of like a super secure Excel spreadsheet, if you like. It's a digital ledger, but the key thing is there's multiple copies of it across computers all over the world. So it just makes it very difficult for hackers or someone to modify that fraudulently, right? So that gives some security there, okay? And you can think of the digital token as a twin, a digital twin of the real world asset. It carries all of the key data about ownership rights, transaction history, can be transferred, importantly, instantly and securely between parties. And so there's a higher level of trust that what I'm looking at is indeed what everyone else is looking at. I mean, that's always been a problem why we've had 3 copies, 4 copies of the same document floating around in trade, right? Is because people want to have a carbon copy. So at least tokenization means that everyone can trust they're looking at the same data there. In trade finance, the really exciting thing for, I think, everybody on this call as well is the fact that we can take a warehouse receipt, say for copper, or an invoice for goods shipped from Cape Town to Singapore, and turn that into a digital token that companies can trade. They can buy and sell that, but also interestingly, can just pledge that digitally with lenders or investors instantly, and we can automate a lot of the process of checking the data in there and being able to trust, yeah, I can lend against that. And the other super exciting thing, drawing back from, well, many years ago being in banking as well, was that, you know, syndicating. So if you had a big commodity portfolio of trade, trying to syndicate that across banks, many, many months, if not years, with lawyers, lots of paperwork, etc. But the other nice thing about tokenization is you can slice and dice transaction value into small bits. And that means that loads of people can come in and syndicate, in fact, eventually automatically. So it's all about freeing up, reducing the cost, the hurdle rate, you know, how, you know, even small transactions can again be processed cost effectively by banks and investors, and quickly, and have that sort of confidence that the data cannot be hacked or changed. Yeah.
Wow, thank you, Tom. And well, that's amazing, you know, in terms of the cost, the data cannot be hacked, because we hear so many stories, but I think how quickly things happen. And I think we for one at Absa in our trade finance, and I think it's reality to us. So we've done the first phase where we've implemented OCR, which is optical character recognition. And as you mentioned, Tom, trade is very paper-based. So, and it has many challenges. You know, all the partial shipments and documents. And we can see how it benefits, and it's actually saved up 50%. So, yeah, so these are actually in exciting times, and the future is very promising. So, on that note, Tom, we're going to start with our questions. And today we will be focusing on, our questions will focus on 4 themes: on liquidity and economic impact, on regulation and governance, inclusion and market access, and infrastructure and interoperability. So I know that's quite a mouthful, but we're going to start with the first question. So to Tom, stablecoins are often discussed as a solution for cross-border trade friction. How can they practically solve real-world trade finance challenges between Singapore and South Africa?
Yeah, I think these innovations. I think it's a key thing is about trust and transparency around the transaction themselves. So being able to receive the information, be it from customs data to port inspector reports, so if it's agri products, fumigation reports, etc. All of this information coming directly from those corporations, not on a bit of paper that might get lost or damaged or it potentially be modified. Having that coming in and being locked into a blockchain means that people all over the world, even if they don't know others, or have an office in South Africa or an office in Singapore, they can trust and verify very, very conveniently that this trade is good, the goods exist, and either I can purchase that or I can lend safely against that. Certainly, customs data, we're seeing already some of that coming into the digital world in many countries, and being able to have that sort of automatic processing just speeds up. It means that goods move faster, money moves faster. So reducing that friction in all of the processing time just again further reduces the cost. We've already seen that even with land-based cross-border trade, where containers are sealed, tracked and traced digitally by customs, who just flag the lorries through, etc. So there's lots of opportunities there.
Thank you, Tom.
Can I add?
Yes, Rob, I'd love to hear from a bank perspective. Do you see stablecoins as an enabler?
Absolutely. Just one thing working this, but
Actually, I think it's
absolutely, I think stablecoins are an enabler. I guess some of the things that maybe why they're such a good enabler. So stablecoins are a 24/7, 365-day a year solution to moving money. So many of us here work for a traditional bank, moving money globally at the moment via solutions like Swift and others takes at least a couple of days. We know that money moves across the world, especially in dollars. Most of the trade solutions are all, and trade finance is all in dollars. Moving money means from South Africa to Singapore today means that money goes to America first, and then it goes to Singapore from America. If you're paying from South Africa to Singapore, and if you're paying from Singapore to South Africa, it goes from Singapore to America. That's that takes time. That's expensive, and that's working capital tied up for 2 days, unnecessarily potentially in the future. Stable coins, that payment can happen in a second between Singapore and South Africa. It's not tied to banking hours, public holidays, everyone can still trade. So I think the stablecoin component is a real unlock for trade finance solutions, because clearly people want to make sure they get paid. The other element, I guess, of stablecoins is smart contracting. So essentially, stablecoins, think of it as programmable money. So as soon as a container, Tom was talking about containers coming into a port, as soon as that container arrives in the port and it's scanned in, the stablecoin can be programmed to release the funds immediately. It's all publicly available, it's all on blockchain. Each party can see that, whether it's the manufacturer, the freight company, the bank. So I think there's a lot of value in simplifying trade products through stablecoins.
So exactly to that point.
That's amazing. So just to summarize that, we're saying, so trust, transparency, speed, low cost, programmable contracts, they're the catalyst for smooth trade. That's amazing. Moving on to question 2, and I think this is something that you've been faced with, and this challenge, and it's about regulatory gaps. So Rob, what key regulatory gaps still exist for tokenized trade assets, and how is Singapore and South Africa addressing them?
So maybe start with some of the things that are in place today that can help enable trade between the two markets. So both South Africa and Singapore have regulatory regimes for licensing of crypto asset service providers or virtual asset service providers, depending on which market you operate in. That's very positive. That gives, I think, some oversight from the regulator about companies that operate in these fields. And obviously Singapore this year actually made their licensing regime quite a lot stricter, which from a bank's point of view, as a banker, is positive. I know lots of people in Singapore and the crypto markets don't love the regime and the stricter licensing requirements in Singapore, but from a bank, it helps us create more trust. But in terms of gaps, I mean, as we were talking about stablecoins there and the flow of funds, one of the big gaps for South Africa especially is some clarity around exchange control rules. As we sit today, exchange control doesn't cover stablecoins and crypto transfer. As a bank, we are working with the regulators to understand what that means for us to be able to participate more actively. Clearly, there are billions of dollars worth of flows going in and out of South Africa every month, which don't comply with today's trade export rules. So there's no balance of payment report, there's no financial surveillance report on those flows today. That's a challenge, I think, and for a lot of companies and businesses that I speak to who want to use stablecoins, they're very concerned about what happens if they are importing and exporting using a stablecoin or paying suppliers in stablecoins cross-border. They're worried that at some point maybe they'll have a problem with the exchange controls. So that's something that needs to be clarified in South Africa. I think there's also some harmonisation needed in some of the elements. So South Africa this year, end of April, implemented the travel rule, which is essentially, think of it as a reporting on a payer and a receiver for any cross-border, for any transaction that happens on a blockchain using a crypto or stablecoin. So very much like in traditional finance, we have transaction monitoring. But the way South Africa have implemented it has a different financial threshold to the way it's implemented in Singapore. So in Singapore, you have to do a report on a stablecoin transaction if it's over 1,500 Singapore dollars. South Africa implemented that regulation at 5,000 rand, which is about 370 Singapore dollars, depending on what the exchange rate is. That creates some issues potentially in the trading between the two markets because the reporting requirement is different on either side. So I think that can create some noise. So I think there's some harmonisation that could be done and will need to be done ultimately. But there's some of probably the two main gaps I would see. I think the tokenization element is pretty established. I don't think there's much regulations that are needed around some of the tokenization elements anymore. It's mainly around the financial flow, I think, is where we've got the gaps.
Thank you, Rob. That's interesting. Let's hear from Tom. From a fintech perspective, are these gaps slowing the adoption?
Not so far. I mean, we're doing quite a bit across Africa where it's often trying to sort of see how best to work with local governments and agencies. One very good example is where we've been issuing digital warehouse receipts. To issue those, we have to joint venture with a regulated warehouse operator in that country. So, little things there, extra steps you have to take at the moment to make sure you are compliant with the local regulations so that it is enforceable. To the point on stable coins there, the interesting thing in programmable money, what's quite interesting, and I'm sure it's going to come up a few times on payments of fees or payments of royalties, certainly for the mining industry. An interesting example came up out of Africa recently where a local government was concerned if people use stablecoin, are they going to just not pay, try to circumvent controls and not pay our 3% royalty fee charges for the mining output, right? In fact, instead, though, we've actually switched around saying, actually, we can automate the collection of the 3%, reduce your cost of collecting the mining royalties and ensure you get it. And it's fully transparent and auditable. So I think as also central banks in African countries and the various ministries controlling areas of certain commodity industries start to understand this, they start to, starting to also really, rather than the initial defensive kind of, oh, I don't know about regulating this and let's just block it for the moment. They're starting to realize, actually, this is going to make our life easier. It's going to reduce the cost of collecting royalties and taxes, etc. So starting to see that pivot. So I'm very positive, at least the direction and the discussion of regulation, just generally, I think.
Thank you, Tom. So just listening, to both perspectives. So what we're saying is that both countries are moving forward. However, cross-border alignment seems to be the missing piece. So Tom, on that note, let's understand what it means to SMEs. So how can these innovations help SMEs get better access to trade finance?
Well, I think the main thing here is, what are the usual problems? And I think many people listening into this may appreciate that already. In terms of the trade finance aspect, it's all about the trust and the cost. How much does it cost to actually review that transaction? If it's too small, it may just not be profitable for me as a lender or as an investor to even start looking at it. We've seen that trade finance gap as a result growing, not because banks don't want to lend, but just there's a certain hurdle rate you've got to get across in terms of revenue, etc. Right? So one thing that we've started to see, it's early stages, is that building the trust. The fact that, as I mentioned earlier, the fact that we can have the inspectors, the real-time tracking, photographs, information, verifications along the supply chain from producer to the end users of the commodities, for example, of the trade, and have that blocked and immutably put on the digital ledger, and bringing trust and transparency. Why do companies in Africa, for example, if they can get trade finance, often certainly when they're dealing with overseas foreign banks, if they're lucky to get that lending, is going to be at a premium, or needs a development bank support. Why? Often it's just because of a lack of data. That's just from what we're seeing, when we came into the trade finance space as a fund. So this tokenization, the digitization process is bringing back trust and transparency. It's helping trades be more easily insured from our recent experience, and also it just means that it's cheaper and faster to review. We heard the opening talk about AI, starting to see a little bit of AI coming into being able to review quickly and filter transactions if the data is there. And now we're getting more digital data on transactions. So it's going to be lowering that cost, that hurdle rate. So we hope that will free up more lenders in this space. They'll be able to come in because it's going to be cost effective to quickly review trades and approve them or give a quick no. So that's the most exciting thing we're starting to see here from our perspective.
Thanks, Tom. Rob, are banks ready to underwrite SME trade finance in a tokenized format?
You and Carol might be better placed to tell me the answer to that. Are we ready? I think our risk models need to be updated. I think there's probably if we think about how we can create products and services using the technology that are cheaper and easier for SMEs to consume, I think that's a really powerful opportunity. I think as a bank, we're not in South, and I'll talk about the South Africa leg particularly, we're not 100% ready to be able to handle stablecoin transactions and stablecoin transfers. We're doing some work around that. We've actually built our own stablecoin as a bank because we think we can do ABSA to ABSA payments quite efficiently using an ABSA token effectively. That could help drive down the cost and barrier to entry. But I'd say today, the majority of banks in South Africa, especially, are not really ready to open this up fully. But I think there's a really great opportunity to automate this process. And I guess we'll talk about some of the other blockers around this process later.
Yeah, I'd just like to add, I think that's a very fair comment as to the state of the industry. I think, we've been talking for many, many years about this, but certainly I think this year we've seen, and we've done some POCs with digital warehouse receipts and being able to, in fact, on one occasion, we received stablecoin payment from AML KYC cleared and whitelisted wallets, like digital bank accounts, which then enabled, although it was still a manual process, it could be automated, then the release of the cargo door on the container using a digital lock. So all the bits of the jigsaw puzzle are there, and I think the next 12 to 24 months we're going to see a very exciting acceleration in the linking up of those jigsaw puzzle in the logistics chain and the control and transparency side of things. So yeah, I think finally blockchain might have found its purpose in life.
Yeah, just listening to both Rob and Tom, I often get asked the question, what is the future of digital operations for trade? And I'm just thinking, I've got my team on the line as well and in the room. I hope they're thinking what this is going to look like. But I think what I think the theme is, for me, we're saying that lower cost, faster approval, and transparent data could unlock SME growth. Yeah, and I think it's just amazing, and the opportunities, there's lots of opportunities. I guess the future is very promising, but it's also a bit scary, apprehensive. So, infrastructure and interoperability. Rob, what's needed to make tokenized trade instruments work seamlessly across banks, platforms, and jurisdictions?
So I think there's some levels of harmonization needed in various areas. I think what we are seeing happen, especially in the last 2 or 3 years, and Tom was talking about the growth earlier, the proliferation of different tokens, different technologies that underpin it, layer 1 and layer 2 protocols on blockchains. I think the people that can successfully cross-chain and work on multiple different blockchains, multiple different tokens, multiple different layers, I think that's a really important unlock. And there's some companies globally doing some really interesting work in that space. Because I actually don't think the technology isn't what's needed to unlock this. I won't harp on too much about regulation. There is some regulatory unlock that's needed too. And then actually, the biggest unlock, I think, will be when all parties in the various trade chains actually trust technology will work. The proof of Tom was talking about some accepting stablecoins earlier. We've run proof of concepts and in ABSA, many proof of concepts about the trade cycle, about working with port authorities and tax authorities and regulators and banks and shipping companies and logistics. It's when you go cross-border with these problems, there's a lot of people in the value chain that need to trust that the system will work. And up until now, that trust is based on a legal contract. It's based on everybody having copies of the same documents. It's trust based on established protocols. I think when that trust moves to the digital native world, that's when it will really unlock, and that's when it will really start scaling.
Thanks, Rob. Tom, I'd like your perspective on that, and what are you seeing, experiencing in terms of the cross platforms and the adoption?
I don't have much to add directly to what was already said there. I agree with everything there, but the one thing I would say perhaps is a comparison of how bills of lading, the control documents for shipments, they were first digitized, if you like, as early as the late 90s with a European project, which then became a group which we've been using for many years for electronic bills of lading. But the adoption was very, very slow initially. We've seen a big ramp up in that, and I think it is actually because of integration between electronic bills of lading organizations. So I think one thing which gives me a positive view of this sort of ramp up of digitization is the fact that we're seeing that collaboration and integration between different electronic bills of lading providers. There's probably 5 or 6 key ones around the world. They often have particular geographical zones which they're very strong in, but you could never take an electronic bill of lading from one system and use it to be received on another. And so that was always a real blockage, in terms of, the cheapest ship, unfortunately, is not signed up to that particular EBL system. So that is starting to break down now, and that key foundation integration work has already started, and I think that is what's going to help buoy and speed up the adoption of digital trade over the coming 1 to 2 years. So yeah.
Listening to the word integration, to me that means a lot, because I think that's the current challenge. But what I'm hearing is harmonized standards, check layers will make interoperability a reality. Tom, in terms of real economic value of tokenized trade finance, so cutting through the hype, what's the real economic value of tokenized trade finance for banks, for SMEs, and the wider ecosystem?
Well, one of the reasons I'm in London actually is meeting up with investors like from the private credit world, which seems to be oozing with cash, looking for homes, hopefully in our direction as well. But that aside, they're looking at the digitization, the fact that there is more basically transparency, turning what can be hundreds of pages of documentation and very complex involvement of multiple parties around an import-export cargo, turning those into a tradable asset. So basically, that's where we can see the unlocking of liquidity. So there's a lot of talk of, when the digitization process is done and we create the tokenized, smart contracts is what many people refer them to, that everybody can interrogate that same block of information. So everybody knows that they're looking at the carbon copy, of the data, and making it automated and faster. That is, we see, getting people interested to be able to come in, new investors, new liquidity flows, potentially coming in there as well. Interesting thing, I've also had some discussions with Lloyd's of London over the last few weeks here, and we can't do trade without insurance, and certainly maybe not so much from Africa, but certainly in other parts of the African continent, a lot of the times people can get the right insurance to do the transactions. So certainly we're not just seeing potentially on the transparency side to get the trade finance side of things, be it making it easier and cheaper for lenders to look at stuff, but also even for the insurers to have confidence of what is the risk around this transaction, ensuring this across maybe multiple thousands of kilometers across land, across Africa to the export terminal. Do I have a more touchy-feely kind of real-time ability to monitor the risk that's there and assess it. So I think, there's a lot of benefits, not just the financing, but also on the insurance side that may emerge.
No, thanks. Thanks for that, Tom. And I think in terms of, opportunities for insurance as well, that, but I'm just mindful of time. So I'd really like to, to go to the last question, and just get your views from a 2030 perspective. And, what are our views? So, and let's go to you, Rob. So looking to 2030, what does a thriving digital first Singapore South Africa trade corridor look like day to day?
2030, three and a half years, 4.5 years. I think digital first is probably one that you touched on it there. I think, is there really in the future going to be as much need for lots of copies of paper, lots of copies of documents? I think if that value chain takes up the challenge, then we could automate a significant portion of that and move it all onto blockchain solutions. I think automating the payment leg, Tom talked earlier about, breaking that payment leg down into smaller pieces. So it's not all based on one final receipt and one final sign off and confirmation. People can be paid in increments through the value chain. That could unlock a lot of working capital for businesses and organizations. So I think digital first, Internet of Things was touched on earlier a little bit in terms of, the traceability, the monitoring the data. With the data that is available, it will, I'm sure, drive lower costs. So you've got more participants. SME market can easier enter the cross-border flows. I think because the cost comes down and the access is much easier using digital first solutions.
Thank you, Rob. Tom, I'd love to hear your perspectives on this.
I think the downside will be we won't get bank holidays off. We're talking about trying to, but we may get to work from home on the bank holiday. But I mean, it's going to be 24/7 real time, so payments and processing. Physical cargoes moving in parallel with that fully digital twin tokenized representation of the trade, which we sliced and diced. You could end up with thousands of people lending even against just one cargo worth $100,000. It's very possible. Tokenization just drops that barrier to entry and that cost of evaluating things. So from a shared risk perspective, syndication, risk participation, it's very, very exciting as an investor and as a lender. I think we're going to be able to have a much broader, diverse portfolio in the trade finance sector of things. We'll be able to automate a lot of that. And so for the SME side, of course, it means finance in minutes, not hours or weeks. With, already SWIFT has been doing POCs and tests between, stablecoin and the SWIFT network, making sure that in fact the large amounts of data that is on a stablecoin and history, in terms of compliance checks and data is not lost when it comes into the SWIFT network. And I think compliance, that's a key thing here. With trade, you've got sanctions checks, AML, KYC, UBO checks, all sorts of, is the transaction real? Is it money laundering, etc.? And that's always delaying stuff. We're often facing ourselves like several, depending on jurisdictions, 2-3 days of extra checks and stuff like that. Where now the prospect is that with the tokenized asset, you already sent all that information there. If a bank or a correspondent bank or anybody wants to check, it's already there. So it can be instantly checked. And that will, again, speed up the flow of money and trade, we hope.
Thanks, Tom. Tom is basically speaking my language. AML checks, KYC. Those are the daily challenges, How do we reduce that? How do we manage risk? So I think the opportunities, possibilities that is in them. And I think it's We have such a great expectation for the future. So to me, the curiosity, that I think it's such a bright future, and it's how we actually embrace change as well. So I think what we've explored today is more than innovation. It's a once in a generation global shift in how trade flows, trust forms, and value is unlocked. Digital assets and tokenization aren't just trends, they're the blueprint for the next chapter of global commerce. I just want to say a huge thank you both to Tom and to Rob, our panelists, for their insights, the forward-looking vision. You've truly given us the token of knowledge that we needed today. And to our audience, thank you for being part of this conversation as well. And I know we're going to leave the opportunity for you to ask questions, but I will hand that over to Adrian.
Thank you very much, Jessica. So with that, if you've got any questions in our live audience, please stick up your hand. I'll bring the mic to you, and then I'll bring. I'll be doing the relay with the mic. Shireen.
Hey guys, so Rob, this one's for you from perhaps the corporate side. What are your thoughts with you guys are onboarding intermediaries, cost license?
Yep.
I feel FSCA pulled the trigger a bit too quickly in terms of how to regulate it, and that's a conversation which is ongoing with the FSCA. But onboarding intermediaries now, intermediaries have, I'm not sure if you guys are running 5 blocks, I'm sure you guys run more 5 blocks competitors, but a lot of them are looking at stablecoins because the smart contract exists. Smart contracts auditable, and with your provider 5 blocks or the others, you have that auditable function. Is it making sense while you're consulting with these intermediaries in terms of them developing the stablecoin? Because if Absa has their own stablecoin, it won't really make sense for intermediaries to create this liquidity pool, making it obsolete, right? So my thoughts are around that. I'm really keen to see Absa stablecoin in action, particularly myself on the fintech side, dabbling in trade finance out in Zambia as well. So interested to know more about how you guys are looking at the stablecoin function, how you guys are looking at intermediaries with stablecoin and the costs of them.
May I jump in there for a second?
Yes, Tom, you can go ahead.
Yeah, so yeah, we are on Fireblocks, and we use various software to whitelist and do the AML KYC clearance on wallets, etc. We've been issuing debt from our fund in stablecoin since December 23. As we found some investors wanted to do that, even small institutional investors were starting to hold stablecoin, and we're starting to see more of that as well, mainly as a yield generating strategy for themselves as well. We started receiving some payments from Africa for imports of chemicals. In fact, just 3 weeks ago, we made our first payment to a supplier in Africa on stablecoin, and the main reason for that was that it was actually a bank holiday in that country at the time, and they needed the money. So we did that, and we're starting to see both Tether, USDT, USDC, as well on the dollar side being increasingly used to speed up payment flows there. So it's starting to happen. I know not USDC, I know Tether as an organization is investing in trade finance. They're giving credit lines to some of the bigger Swiss traders, both in the metals markets and energy sector. I think there was a few trades earlier in the year which hit the press as sort of proof of concepts. So people are playing around with it, and the commodity industry is starting to learn, how to manage it properly. We moved to Fireblocks for security, for example, and so it's an interesting, step-by-step sort of learning process. But I think we'll certainly, with Swift integrating to stable coins, we'll start to see more and more use cases coming up.
So maybe I'll add then a couple of elements, I think, to the question. So if we look at the stablecoin providers, and Tom's talking about Tether and Circle, so we are entering into relationships with them, and we build relationships with them to understand what controls they've got in place when issuing, and we're considering how we participate in that. So should we issue on their behalf? We're with them. Should we use our own stablecoin? There's lots of paths that really need to take. I don't think we've settled on a final route. I think we're experimenting right now and understanding what those options look like. We know that our clients are increasingly moving towards solutions like Tether and Circle, dollar-backed stablecoins. I mean, 99% of the global supply of stablecoins is dollar-backed. That's like $270 billion worth of stablecoins. So we are working with them and understanding our role. You asked about the CASPs. 250 or so licensed in South Africa. That's a lot of licenses for CASPs. If you look at Dubai, there's 8 companies listed as a VASP in Dubai. Singapore is probably even less by the time the new regime has come in over the last 3 or 4 months. So there's a lot of them, and I think we are taking the same approach we do with any other business that we enter a relationship into. We look at the business, we do due diligence, we've got a policy internally around enhanced due diligence for CASPs. So we are working through that, but we take it on a case-by-case basis in terms of how we build a relationship with each of those businesses.
Thank you, Tom and Rob, for getting those questions. And then I'll hand over to Trevanika Naidu.
Thanks so much. So this is so exciting what I've heard. I heard about unlocking value, Jess. That's what you said. And I heard through lower cost, efficiency, and cheaper funding. And all of this is important to everybody. But I think more so for smaller businesses. But the reality is they may not have in-house technology or blockchain capability. So how will they be able to, participate in this sort of thing?
Shall I start, Tom? So I think the first thing for any SME to do, and SME or any other business, is to educate themselves a little bit more around what the opportunities could be, learn more about the technology. You don't need a team to be able to there's so much free resources on the internet. You go to any, even the global firms that we work with, companies like Chainalysis, they all offer training. Tether actually have a big education program running across Africa to help educate and create awareness of the products and solutions. So I think that's the first step. I think there are many incredible fintech businesses in our markets, and I think we're quite lucky in South Africa, especially to have quite a thriving fintech market in blockchain technology, especially, who are creating solutions specifically for SMEs. And so I don't think a business, an SME, so it doesn't need to really build or buy that solution themselves. They can work and partner with others. Different, I guess, but us as a bank, we are lucky. We've got a small team of people looking at technology and looking at smart contracting and how do we protect assets, how do we run cyber security, and what are the new threat vectors that come in if we start operating in this market. So most businesses won't be able to do that, but I think the fintech space, and what I've also found actually since I've been doing this job, is how open and willing blockchain organizations are to work together and collaborate and share. Because I think everybody realizes that as soon as banks like ours will also get involved, that's going to open up the market even more. It's a $4 trillion market today if you look at digital assets, which is the majority of which is obviously Bitcoin. But as soon as regulated financial institutions are also participating, that unlocks the door to everybody else. There are 40-odd million people in Africa, or 40-odd million wallets in Africa, I'd rather say that. But in a continent of 1.5 billion, that's a huge unlock still to come. So I think there's lots more opportunities.
And I think just to add to that, I mean, in Africa particularly, people are so familiar with mobile banking, from the get-go on their mobile phones and smartphones. here in Singapore, we're working with a local firm here, which is also building stablecoin payment rails. And to that very, very good question, you know, a lot of our counterparties, SMEs that we work with in Africa, yeah, not all of them are savvy or up to speed with, you know, wallets and digital assets and how to manage the security on it and things like this. So, you know, there are services which are now starting to emerge, which allow people to, they don't see the stable coin bit at the background. You know, they receive the value into what just looks like an online bank account, and they can, you know, and certainly as banks integrate on that as well. So I think, you know, there will be the opportunity there where people won't have to be technically savvy. They won't even see that the tokenization and the smart contracts and the stable coin technology at the background. They'll just have an interface that just looks like a normal banking app.
Thank you very much. Do we have any other questions in the audience? Okay, there's no questions in our online chat. Okay, with that, I'd like to say thank you. I looked into camera. Sam James, thank you very much for jumping online, all the way from London. Thank you to Mr. Rob Downs, Mr. Shane Glenn Cooper, and Jessica Gowden for sharing your expertise, knowledge with us all this morning. I found it quite insightful, being someone that's from the telecommunications background. And with that, I'd like to also share that for everyone here in Johannesburg, you may now engage in some networking and enjoy light refreshments and breakfast until the event closes at 11 a.m. A reminder to scan each other's QR codes if you are engaging with anyone of the audience here today. And also, I'd like to ask to please leave your badges after the event at the registration table. Thank you very much. With that, thank you for everybody also joining online today. Until our next event, have a good day. Bye-bye.
Thank you very much.